Hope everyone's well. Let's have a quick look at the economic calendar for the week ahead. So, for this week, I do expect it to be a technical driven week, meaning there's not much drivers in the market. So, expect even weak technical levels to work. That doesn't mean jump in any trade, it just means that because there's no driver, the technicals are likely to work. So, one thing about news before I start is some people have the misconception that you need to understand what the news events are to trade them. To a degree, yes, because fundamentals is what drives the price. But I think the a fundamental intuition gets developed over time because news. So when you look at a news event, I will make a separate video, a much more structured video on news. But the thing with news is it's a never-ending rabbit hole. One thing about the results is if it's green or red is not if it's good or bad. To a degree, yes, it is, but it's literally just based off the consensus. Is it above or below the consensus? So the thing with news is market reacts based on market's perception. What big money thinks or perceives from the news event, and that is what will dictate how market reacts. And again, it's a never-ending rabbit hole. There's a lot of confusion that it can cause. So there's a way to trade it without really understanding it too much. Now, we're a few weeks away from the US elections. I do expect this to slightly be the calm before the storm. I say calm, the markets are going to be manipulated. So we'll have a quick look at this week, what news events we've got, and then we'll plan based around them. Monday, it's we've got nothing. It's very quiet on Monday. Tuesday, the only thing we really do have is pound employment data and other news, but none of this is relevant to me because I only look at pound, sometimes yen, and dollar. Dollar's the main one because it drives the whole market. Wednesday, we've got CPI for pound. And Thursday, yes, we've got import exports on yen, but it's not much of a driver. We've got retail sales, so yes, Wednesday, dollar could pick up. And finally, Friday as well, not much. We've just got some retail sales early in the morning. So, how do you trade news events without knowing a great deal about them? One, just don't. Two, there is a way where you look at the previous results. So, we'll look at CPI for pound, which we have on Wednesday as an example on GJ. Now, there's a few ways to do it and there's layers to it as well. You can have a look at the previous results and look at the chart and is it coming down, is it stable, and how it's reacted, similarities in the past. I'm a bit too brain dead for that. The way I would do it is I would look at the biggest deviations, negative and positive, and look at a few examples of where there's no deviation, and just get a rough idea of how much it has moved in the past. Imagine the more you look into it, the better of an understanding you will have, and also you need to take into account market perception, which I really don't have just yet. I can some news events get a better understanding, but sometimes it is confusing, and when it is confusing, I don't let that confuse me, if that makes sense. I understand, I don't understand, and I'm okay with that. Some people aren't okay with that, but we'll look at the previous one. So on the 18th of September, there was no deviation. It came out as consensus. So if you look at GJ, I'm gonna go on to the hourly. So the 18th, somewhere down here, of the 7th, well, 7. So this is where we had no deviation and price went up 40 pips for the hour, and over the next few hours it pushed a bit more, but not the biggest move. It will look at the one before that as well because this is a negative deviation of 0.75, which is on the 14th of the 8th, which would be somewhere around. So over here, 14th of the 8th, this is where it came out, and a negative deviation of 0.75 was it? Gave us 70 pips towards the downside. So an initial bearish reaction, which was retraced pretty much the hour after. We'll have a look at this positive deviation as well. So the 22nd of the 5th, which is somewhere over here. Yeah. So I'd expect this is a move. So 80 pips towards the upside, and that's the 22nd of the 5th at 7 o'clock. So this was when we had a positive deviation of 0.81. So a negative 0.75 gave us 70 pips towards the downside. Positive 0.81 gave us 80 pips towards the upside. Now this isn't to say that's exactly how it works, because you need to keep in mind. So let's have a look at this date, 18th of the 9th. If you go on the economic calendar and you go into September, we'll just have a look at the 18th. September 18th, apply. We are just looking at this. We're not taking into account anything apart from that. So there's other news events as well, which, look, we had retail price index, we had PPI. So you would have to look at the other ones as well. You can kind of just keep an eye out, the one that holds the most bearing. Have a look. Are all of them positive? Then yeah, the positive reaction might be a bit more. If it's a bit mixed, then which one holds the most value? And this is why I do say that it is a bit difficult to trade news. The best way, honestly, to do it is journal forward, like forward test news. How you back test tech. It's better to forward test tech, but it's also way better to forward test news as well. And over time, you get a much better understanding and how it affects the price. Hopefully, this quick video did give you a better understanding into news. And if you don't get it, just don't trade it. And another thing to keep in mind is as well, if let's say the biggest deviation that you could see for the past 12 months was 200 pips towards the upside, then you look at current price right now, or near the news event, you look at your technical zone around 200 pips away. Yes, it makes sense to take this trade, because if price is going to push up, there is big money that's in buys and they're in profits. Where are they going to take profits? At the most obvious technical levels. It's almost guaranteed. And the fact that it's already up 200 pips for the day, if this doesn't deliver the pullback and price keeps pushing higher, now we're up 400 pips for the day, and they do have to take profit somewhere. That's where you get the profit taking move. You cash most of your position, you leave a runner, and then if it does go down, great, you've caught the runner. If it doesn't, you still make money and you enter at the top again.